Welcome back to the channel, friends. Today, I want to talk to you about the various asset classes that you can be investing your money in. Because many people are familiar with investing in stocks, maybe ETFs, also some cryptocurrency. But in fact, there are so many different asset classes that we could be potentially investing our money in. Asset class is basically anything that you invest in that grows in value over time. Now, obviously, since we have so many different asset classes, they all have different characteristics. How much risk are you willing to take? If you go to Las Vegas in a casino and gamble, you may double or triple your money overnight, but you might also lose everything. Then we have returns. How much return can you make from your money? Now, as I mentioned before, if you keep your money in a bank account where you think it's fairly safe, yeah, maybe it is, but also the return is very low, right? Maybe 1%, maybe 2%, some cases even 0%. So returns are very low. Now, when you look at some meme coins, for example, right? Some people like to invest in that. The returns could be astronomical, but you could also lose everything and have basically, negative returns if you borrowed money. And lastly, we have volatility. How much price swings do we have in a given asset? And whether you like it or not, no asset only goes up. There will always be times of ups and downs. Any asset will fluctuate in price, some more, some less. And that's something we also want to keep in mind when we choose our asset of choice. But generally, we could say higher risks usually come with higher potential returns. Not guaranteed, but potential returns. So let's dive right in, starting with the least risk, working our way to the most risky investments. Now, obviously, the least risk is cash and savings. So here the risk level is obviously very low. If you go with one of the biggest banks in your respective country, your money is fairly safe. The returns that you can make in the form of interest obviously depends on the current market rate. Right now, interest rates have been coming down on a global level. It could have been 5 to 6% in the past. I still get 6% on my money here in the UAE, but in Europe, it's significantly less, maybe 1, maybe 2%. So that just will fluctuate over time, but generally on the lower side. Volatility, none, because obviously your money is there, right? It doesn't really fluctuate anything. And the good thing, what I do like about it is the liquidity. That's one of the big pluses of having cash or savings. The money is there whenever you need it, right? If you need to pay something Sunday night, you can just pay with it with your bank card and make the transfer and it's done, right? We'll come to other asset classes later on that are great, that have great return potential, but you can't really liquidate them if you need the funds immediately, right? So that's also something to consider. In terms of time horizon, obviously it depends on you, right? I always like to have part of my net worth in cash just to give me optionality if I see a market opportunity to capitalize on it, and just that peace of mind that I don't have all my money invested in stocks or ETFs or real estate, so that I do have the liquidity and peace of mind. If an emergency happens, I have those funds available. So yeah, overall, obviously very safe. Again, returns are fairly small. I wouldn't recommend to have too much of your money in cash or even savings, because in many cases, you're still losing to inflation. Imagine inflation 3-4% and your interest rate is 2%. You're still net losing money over time. With this, we move to the next category, which are bonds. Now, they used to be much more popular in the past, right? A lot of people said put 70% of your money into bonds and 30% into stocks. I think that really turned around. Younger people less and less invest in bonds. Personally, I don't hold any bonds. Basically, it's almost like an IOU where you become the lender to either the government, right? These are governmental bonds, or corporations, right? Big companies can issue bonds, basically debt, and you finance their debt by giving them money. And the good thing here is that it's really fairly safe, right? It's unlikely that those big companies go bust overnight. It can happen, but it's unlikely. Or even safer are government-issued bonds. If you buy bonds from the US or Germany or any of those big countries, it's fairly safe that they will pay you back over time. Plus, of course, you get that regular interest, right? So it's really nice for that passive income in the form of coupon payments that's paid to you. It's basically the same as interest. And again, those can range, from 3 to 6%, depending what bond you're going for. But for me, it's just not worth, because also liquidity is not as available as it is with cash, right? You're kind of tied up. You can sell your bond early, but usually those bonds are long-term for a couple of years agreements, which I'm not a big fan of given the slightly lower interest rates. With this, we move to gold, or in general, precious metals. But gold, actually the biggest asset class, as you can see over here, the market cap of gold is $31 trillion, far, far ahead of all the other companies. The biggest company in the world right now, Nvidia, at $4.5 trillion, and then Bitcoin only at $1.8 trillion, right? So it still has a long way to go if it was to catch gold. So yeah, by far the most valuable. Now, obviously, real estate, we'll come to this later on. Technically, if you add up all real estate in the world, would arguably be more valuable, but it's a little bit hard to measure. But from the ones we can measure, gold is the most valuable. Now here, generally, the risk level is really on the lower side, I would say. Gold is not super exciting, and the returns have been 3 to 7% historically. You kind of invest in gold to beat inflation. Now, having said that, if you have checked the price of gold over the last few months, it's been absolutely on a rally, outperforming Bitcoin really, really crazy. I personally don't hold any gold, not the biggest fan of it, but the last few months have been absolutely smashing it. But again, of course, that's just one period of time, but over a longer period, 10, 20 years, obviously it did still really well, but yeah, the returns will come down naturally over time. Volatility is medium because while it does swing in price over time, it does so much less than some of the more risky investments that we come to in a moment. Liquidity is high. Technically, if you have the gold at home, you could go in the shop, liquidate it, you get money for it. But then again, in reality, it is a bit more tricky to do, right? Convenience, not so high because you would have to go to a shop. It's sometimes a bit hard to quantify whether they give you the right price for the gold. You also have to think about storage and so forth, whether you want to keep it at home or leave it at the bank. Leaving it at the bank, we just seen, for example, in Germany, where they broke into a bank and stole a lot of people's gold. So yeah, that just brings its own set of risks, but definitely one of the popular investment classes out there. And one thing for me that I don't really like is it doesn't produce incomes or dividends. Now, it's not a must for investments, but I do enjoy this passive income that's being paid to me by some of the other investments that I do have. And that brings me exactly to the next one, which is dividend investing. Now, dividend investing is where you basically invest in an asset, most commonly stocks or ETFs, that do pay you a regular dividend over time. It can be a monthly dividend, quarterly, or annual. They pay out a dividend. Basically, part of the profits that the company generates, they pay out to the shareholders. And if you are a shareholder, you get a part of those profits paid to you, which can be quite attractive. And here it depends which company you're investing in. For example, the S&P 500 also pays a dividend because there's some companies in there that do pay out the dividend. Right now, it's around 1.2% on average, but obviously you can invest in really high-paying dividend companies that pay you 6, 7, 8%. I invest in one company here in the UAE, in Dubai. It's a real estate company, MR. They pay me almost 7% dividend. Really quite attractive, right? So that's also something that a lot of people like because here, even if the stock price goes up or down, it doesn't really matter too much to the investor because they expect the dividends to be paid regularly. Now, keep in mind though, that those dividends are not guaranteed. A lot of people say, oh, I get 6% dividend. That's really nice. When I retired, I can live on the 6%. Sounds good in theory, but keep in mind, those dividends are paid from the profits. If a company all of a sudden is not profitable anymore, guess what happens? They start cutting the dividend. So it's not guaranteed that they will forever pay a dividend in perpetuity. A lot of companies, they pay and grow even the dividend over time, which is great, but it's not guaranteed. So just keep that in mind as well. And that brings me to another very popular category that a lot of people are familiar with, and that is real estate. I personally own 2 apartments as well, actually here in the UAE, and they have been so far my best investment actually. However, do keep in mind that also it requires a lot of capital to get started. Depending on which country you're living in, different regulations, you may need a lot of upfront capital to get started in owning real estate, right? Stocks you can buy with very little money. Savings you can have with very little money, right? There's no minimum amount. You can just get started even with $10, right? It doesn't matter. With real estate, again, depending on what kind of unit you're looking at, it might be several thousands, hundreds of thousands of dollars. Another big consideration of real estate is the liquidity is very low. Now, if I needed the money right now and maybe want to use it to buy a bigger house or invest it all in stocks or whatever, emergency, whatever it may be, if I wanted to sell my apartment today until I have the money in my bank account, that can take weeks, even up to months. So it's really illiquid, which doesn't make it a worse asset class. It's just something to consider. If you have all your money in real estate tied up and you have a life emergency or need those funds, it can really work against you. So that's why I like to diversify my funds, have some of it in real estate where no liquidity is low and others in much more liquid investments. So I can always be flexible and capitalize on any opportunities that present themselves. And of course, also keep in mind, if you invest in real estate for investment purposes, most likely you're going to rent it out. Then you have to deal with tenants and so forth. If you don't want to deal with, then you have an agency, which I have, but then you pay fees to the agency. So there's a lot of bureaucracy, additional costs. It's definitely not as easy as just simply buying a stock through your broker. If you want it a bit more easy, you still like real estate and want to get exposure to it without locking up so much of your capital, you can invest in REITs, real estate investment trusts. So these are technically companies that buy real estate on investors' behalf. They buy up more and more properties and you can buy shares in the company and technically therefore benefit from all the real estate growth and benefits that real estate brings to them. And yeah, that's much more approachable for many people. You can start it from very little money. And of course, here the problem of liquidity is gone. If you need your funds back, you can just sell your REIT shares on the stock market and get your money back immediately. So much more liquid, and that's why it appeals to a lot of people. You often also get dividends paid to you. Many of the companies like Realty Income, for example, they pay a monthly dividend, which appeals to many investors. That brings me to one of the most popular asset classes, which are index funds and ETFs. Now, you can't directly invest in an index fund, right? When we talk about the S&P 500, that's the index, right? It covers the 500 biggest companies in the US. You can't technically invest into that index, but you can invest into an ETF, exchange traded fund, that mimics that index. So there are companies out there, ETF providers, that basically on your behalf buy exactly all the companies in a specific index that you want. That's what I do as well. And that really works for pretty much most investors. It's very easy, high liquidity. If you need your funds, you can sell it, you have your money back, and you don't have to do anything, right? They do all the homework for you. You just put your money in there and it goes to work. And in the case of the S&P 500, you're already diversified across 500 companies. You can even invest in an all-world ETF, which basically invests your money across many different stock markets across the world. And that could be a great way to passively diversify and grow your wealth over time. And the great thing is the fees are so low. A lot of people invest in mutual funds, even though many of them underperform market returns. Plus, they will charge you a high percentage, 1%, 1.5% even. I've seen up to 2% crazy. In my case, I invest into S&P 500. I pay 0.03% in fees. Absolutely peanuts. So definitely really attractive for pretty much most investors. With this, we come to a bit more risky investment classes. And here we have, for example, P2P lending. Similar to bonds, here once again, you become the lender, borrowing money to more risky either companies or people, right? There are platforms that facilitate that, where basically people go to that need money, you give them money, and in exchange, you get paid an interest rate for that. And that can be much higher because it's also much more risky, right? A startup company or even individual who wants to finish his house and needs a bit of cash. So here the interest rates I personally get right now, 6% on my money from Bondora. I've been using them for a number of years now, really happy with them. But you could go even up to 12%, even seen up to 15% where you get some cases. And that, of course, is really attractive for investors. But at the same time, it also comes with much more risk in case the people do not pay back their loans. With this, we come to individual stocks, and that appeals to a lot of people, right? Everybody likes to stock pick, right? And while it can be really successful, as we've seen in the case of Nvidia, if you invested 10 years ago, you would have had a return of 28,400%. I mean, mind-boggling numbers. I triple-checked that number, but it's actually correct. $10,000 10 years ago would have turned into 2.85 million. Now, a lot of people see that and say, oh, I want to do that. I want to be next guru who predicts the new future stock. But again, as great as it sounds, that's like saying, I want to become the next Ronaldo. You know, it is possible, but chances of consistently doing that are highly likely, right? How many stocks you would have picked that are equally underperformed? So you can have a high upside potential, at the same time, also very high downside, right? A lot of companies we've seen, they went nowhere, they even went bankrupt, and all your money that you would have invested went to zero. So do keep that in mind as well. Generally, over time, most people do underperform the market. Once again, it's very hard to consistently outperform the S&P 500 that we had previously in our ETFs, for example, over here, which is passively. Here you do it actively, and the chances and the odds are against you that you manage to outperform the market. The good thing is though, liquidity is also very high. If you need the money, you can just sell your shares and hopefully at a profit, and then you have your money. Then we come to Bitcoin. You could say cryptocurrency at large, but cryptocurrency has obviously the big coins like Bitcoin, Ethereum. We have altcoins. Then we have also meme coins. So it's really a complex ecosystem. I could talk about this, a whole presentation, but I just want to focus on Bitcoin as it is the most dominant and most established cryptocurrency out of all of them. Historically, it has done very well. Even though I was surprised, over a 10-year period, it still underperformed Nvidia. Nvidia, $10,000 over the same period would have turned into 2.85 million, with Bitcoin only, but still a respectable $2.4 million. Really great return. Now, last year hasn't been that great, but that's also because volatility is much higher, right? We consistently see, price fluctuation and price swings 50 up to 80%. So if you cannot stomach such a volatility, such a change in prices, then honestly, Bitcoin or crypto at large may not be for you, because these swings will happen, right? That's why we also see major growth overnight or over a short period, but those swings can also go to the downside. So that's something you have to be able to stomach. But liquidity is arguably one of the highest ones. I mean, I can sell my Bitcoin, on a Sunday night, which I can't even do with my stocks. So it's really one of the most liquid investments you can have, but it comes at the cost of high risk and high volatility. And lastly, there are also alternative assets that some people choose to invest in. Now, personally, I don't do that. I didn't mention that, invest in Bitcoin. It's actually my second biggest holding after my real estate. But you could also invest in alternative assets such as art and paintings, luxury watches, wines and whiskey, classic cars, trading cards, all these Pokemon cards that you see online, sneakers. So many different ways. My wife actually, on that note, bought really nice handbags that actually appreciated in value over time. So even that could be considered an alternative investment, right? If you do that smartly and consciously over time. Keep in mind, again, here volatility could be on the higher side and liquidity also generally lower. To sell a vintage car, it's not done the same day, right? It usually takes a few days or weeks even to get the price that you're looking for. But at the same time, often a lot of the people investing into alternative assets do it because that brings them daily joy, right? If you invest into nice artwork or a nice bottle of wine, you can look at it, you can feel it, you can smell it, and it's nice. When I open my stockbroker, I'm happy when I'm in the plus and my portfolio went up. But it's a different kind of experience, right? So again, each of those asset classes has their pros and cons, and those definitely can have a place in an investor's portfolio. But if you're starting off and have zero investments, probably alternative assets wouldn't be my recommendations to get started. It could be one later on to add, to diversify, but it wouldn't be my first choice. So yeah, when we look at the overview, overall you can see here different asset classes have different investment characteristics and profiles from risk, returns, volatility, and liquidity. And that's great, right? This way you can pick and choose what you like most. But as I'm always saying, I'm a big fan of diversifying your assets because different assets have different characteristics and they do better in different macroeconomic cycles, right? Some of them in the bull markets are doing much better. In a bear market, you want to have more conservative investments. So that's why I'm a big fan of investing across different ones. Maybe not all of them, but a couple, so you can benefit from different ones at different times of the market cycle. And lastly, two little bonuses of investments that a lot of people don't actually think about. That's investing in yourself. Now, as cheesy as it sounds, I actually think this could be your single best investment because if you consistently educate yourself, go with the times, grow, develop, network, build your health, build your fitness, your mindset, that can really help yourself level up, find new people, find new investment opportunities, just overall make better decisions, increase your earning potential, right? And the more you earn, you can later on reinvest it into another asset class to further compound growth your portfolio over time. So I think it's super important. Do not forget about that because I see some people, they put every single euro, dollar, pound, whatever they have into the markets, but often they forget to invest in themselves. So that's really important. And equally, if you're a business owner, then also do remember to invest in your business, right? Because that could have an even greater return. Putting some money back to run additional ads, marketing, come up with a new product line, that could actually yield you a greater return than maybe 10% from an S&P 500 investment, right? So that's also something to keep in mind. Yes, again, it's not guaranteed, but you know your business better than anyone else. And if you see the potential of putting 5K into running better ads with a 3x return, right? That's significantly more than putting the same money into some boring bonds. And I'm a big fan of that. So as you can see, there's not one best investment asset class. There are many different ones. Each of them has their pros and cons, and that's why I like to diversify. But if you're starting off and you're overwhelmed, pick just one asset class, start with a small amount and get a feel for it, right? And then start building up a bigger position. And then you see whether you like it or not. If it's volatile, you don't like volatility, move into another asset class until you find out what works for you and what doesn't. But I'm interested to hear from you. Let me know in the comments down below, what is your favorite asset class to invest in? Next up, check out this video over here. As always, thanks for watching. Stay healthy, get wealthy. See you in the next one. Ciao.